What's up, you guys? Zoeb here from OneGlanceTrader.com, and in this video I'll be walking you guys through the analysis on one of my live trades where I made just under $50 in the space of 30 minutes trading missed pivots and divergence. And what I like to do is trade high probability setups, and you can see I've got a number of indicators on the screen, so we'll be going through what these indicators are, where you can get them, the thought process, the entry, take profit and stop loss of this particular trade, and how you can replicate your charts to look exactly like mine to find the same setups. And if you like the sound of that, all I ask in return is that you smash that like button and don't forget to subscribe and hit that bell notification icon. So what we're going to be talking about today is my miss pivot strategy, and I'll link down below to a more comprehensive view of the miss pivot strategy, and also divergence. These are two technical tools that I like to use along with other tools that you'll see in a second, um, to really build a story and to find high probability trade setup. So if I walk you guys through what I've got on my chart at the moment, you can see that I've got a number of indicators. And again, all these indicators are either standard as part of the MT4 terminal, or you can download them absolutely free. Link is inside the description to pick all of these up inside the members area. The first one we're going to talk about, which is quite integral to this strategy, is pivot point. So I'm not going to go into what pivot points are, but effectively they are natural support and resistance zones where you can either get daily pivots, weekly pivots, monthly pivots, and the indicator I've created in version 1.1, you can actually get hourly, 4-hour, and 30-minute pivots as well. And pivots are drawn by these lines over here of particular pivot points. You do have resistance points and support points, which you can get in the indicator, but I only like to look and trade on pivot points. And what I like about pivot points are, and the pivot points I've got on my screen now are daily pivot points. And what you will notice is you will see that majority of the time, 80-90% of the time, pivots are generally hit on the time period that they are created. So in a daily pivot, for example, you would traditionally see 80-90% of the time the daily pivot to be hit. As you can see here, we've got a hit on the day it was made, hit, 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 miss, and we got a hit. So is this kind of area, these 2 days here, there's what I'll be talking about inside this particular trade setup. And what I like to look for is I get interested when I see a missed daily pivot. That's when I start getting interested in the charts for a potential reversal strategy. And this is a reversal trade that I like to look at. So we've got pivot points. The next one we've got these dashed lines here. This is the OGT um, round numbers indicator, and what this indicator basically does is it's again another natural support resistance zones at the 50 level and at the 100 level of currency pairs. And you can see here that price reacts to these levels quite consistently over at these things, and these are good points to note on the chart, especially when you're doing entries, takes profit targets, or potential barriers or support and resistance that price needs to get through before it gets to your profit target. So that's the second one. The third one we've got over here is the OGT trend dashboard, and what this looks at, three moving averages that you can set up, and when they're in a particular order, it will then basically tell you whether a currency pair is trending up, trending down, or ranging. So green for up, red for down, grey for ranging. And again, what you've got here is you can do all the time frames, but for this particular strategy, because I like to trade this, and this is the just work out which pair this was again. I get confused half the time. Yeah, it's the USD JPY, and it does actually say over here USD JPY, and this is the 30-minute chart from memory. Um, yes, it is. Yep, USD 30-minute chart. So, and what you can see here is we've got the 4-hour and the weekly basically ranging, but the daily and the monthly trending up. So for this particular strategy, I like to use the trend dashboard more as am I trading with the trend or against the trend? And if I'm trading against the trend, all it means is it doesn't mean I don't take the trade. What it means is that my lot size or my risk parameters are a bit lower, because again I'm kind of going against the kind of grain of the trend. And as you can see here is even though and this is the kind of trade that we're taking here, this movement here is, even though this is a reversal, but on the longer term time frames, as you can see here, we have been trending upwards. So what it's funny that there's people that say that every trade is a reversal, because it depends on what time frame you're looking at. So so that's that piece there. Next bit here is I've got the just standard EMAs and the links down below to get the periods that I like to use, or it's not what I like to use, it's Dal Guppy's. I'll link to Dal Guppy's video actually. He talks about moving averages and how you can use moving averages as compression points and as expansion points, as you can kind of see it, as you can kind of see over here. You've got expansion, compression, and expansion, and that kind of helps you in terms of determining a strength of a trend, or when a trend could potentially be kind of turning. As you can kind of see over here, you've got this big compression area here, and then things start to fan out. So very interesting. I like to have it on there as, again, as more of a guide in terms of what's going on as part of that. And then the last one, we've got the MACD, linear weighted moving average. Again, it's just a standard MACD really. There's a number of MACDs. Again, this one is free in the members area, and again, I like to use the linear weighted only because it gives you more of a smooth curves, and it's easier to kind of find kind of divergence points within them. So those are the indicators that I'm using, and now let's get on to the actual trade. So, and these lines here are just standard. It just breaks out the days, so we can kind of see what's going on here. So we can see here that on the 15th we had a missed daily pivot. Now, when that happens, what I'm looking for are signs of a trend weakening and potentially going back in this direction. And what I love to use, and I talk about it enough, is I like to use missed pivot points as take profit targets. So what I'm looking for is I'm looking for price to do this and to find an entry at some point. Well, not at this level. So I'm looking for that movement, and then somewhere within this price action over here is I'm looking to get a trade to move up to that pivot point. That's what I'm looking for. And I'll tell you where I did this and why I've done that. So when we had the missed pivot, obviously I was looking inside the at the market open in the evening inside the UK, and we were flirting around this area over here. And then when I woke up inside the morning, I woke up around this consolidation area over here. Now at that point, we had the following. What I liked about this trade, we had a double bottom. Yeah, price came down mid low and then came back up and consolidate at this area, and it's finding resistance at this 100 level. When this whole kind of price action was forming, we are getting bullish regular divergence here. This is where price is either making higher lows or the same, um, and then you've got higher lows over here as well. So you've got bullish regular divergence. If I can even use the right things inside here. Don't think I've explained that pretty well. Let me just do that again. So where you've got disagreement between the oscillator and price. Price is making higher lows, and the oscillator is not making higher lows. It's basically flat. It's making the same lows. So therefore, you've got a disagreement between price and the and the oscillator. And then you've got this again here in the previous day, where you've got lower lows, higher lows. Again, disagreement between price, therefore considering a place of potential exhaustion. And by the time I woke up and got to this consolidation area, you can see that price already started to form that double bottom and started to look at price over here. Now price could have gone down and continued to range and then continued to gone down. That's what could have happened, and it very well could have. But what I like to see here is then I saw this bar over here bullish candle, quite a big candle, closed near its high, really momentum play over this angle here. And I liked the look of that 30-minute candle. And when I saw that look of that candle, what I started to do is look at, okay, if I had a take profit line around this area, and if I had a stop loss around this area, could I get a reward to risk of at least 1-to-1? That's what I'm looking for at a minimum, if I can get that. And then what I also liked about this trade is that, like we mentioned before, we've got the trend dashboard over here. The higher time frames, the daily and the monthly, are pointing upwards, which is what we like to see. And at the same time, you can also see the compression of the moving averages. So we've got expansion. Price went into the moving averages, but still expanded, saying this trend is strong. Then went down to make another low, made another low, and then as it moved back in, unlike this area here where you had the still had the spread, here we started to see some expansion, some compression happen at that point, again giving us an indication that we could be at a potential reversal. So what I've done here is I've shown here where it's the same chart. I've just added the entry, take profit, and stop loss lines, as opposed to me trying to draw them with my finger. Otherwise, it probably would have been a bit difficult for you guys. Does this thing work? Yeah, it kind of works here. So then what we did was, when we saw this bullish bar, I got in pretty much just at the open of the next bar. I set my stop loss below the lows of this kind of consolidation pattern over here, and then we basically have, what I like to do is set the take profit not at the level, even though it broke through anyway, just below the level, just to give me, I've seen it a few times where it literally gets just right to it and then reverses back the other way. And the reward to risk parameters that I managed to get in there was a 1.1 to 1 reward to risk. So that for me was a fairly decent trade. And as you can see here, the next 30-minute bar pretty much makes it straight away, and I can't remember how long it took. It was around 22 minutes for it to get to my take profit target. And as you can see now, we got to the highs of here and is now starting to come back down back to my entry price. But I was already out of the trade by that point, and that is the way that I kind of analyze this particular trade. And if I go back to this one, which will make life a bit easier, is if we just recap this on what I like. We had a missed pivot. That's the first thing I look at. So I check the charts in the morning to see, did yesterday's pivot get hit? It did on the USD JPY. Then what we're looking for is, how does it react to this pivot point over here? Do we get another missed pivot, or do we get a hit? Once we get a hit on the next day after a missed pivot and a very strong move up on that, that's a good sign that price wants to continue to go up. And again, I was asleep during this, and then we got to this area here where I woke up inside the morning. Yeah, then we had this area of consolidation here. Price could either go back down here, or it could go up. And when I saw this bullish bar over here, saw this bullish bar of making a big momentum play up, I wanted to get into this trade. And I've got the technical indicators of a double bottom, bullish divergence, disagreement on price, and a missed pivot as a take profit target. And the reason why I like to use missed pivots at take profit targets, usually when a missed pivot happens within, especially on daily ones, within a week, and traditionally it's normally the next day, the missed pivot is generally hit. So, and everything was aligning there in terms of the compression of the moving averages, the bullish divergence, the break above this resistance area over here. We had everything in line for it to get up to that level, which is what I love about this trade. And again, rewatch the video a few times. There's a lot of things in there, and I break down all these concepts in all my other videos. Check out the links down below around missed pivots, around Guppy's moving averages, around divergence, double tops. They're all in there. I've got dedicated videos on this, so I've kind of consolidated it all into one. and how you can form that into a trading setup. So please check out the videos down below. On the end screen now, you've got my missed pivot strategy and you've got Guppy's moving averages as well. Again, check out those videos and don't use these indicators in isolation. Bring them all together to bring a confluence trading approach. And click the links now, and I shall see you guys in the next video.